This is Seewing Yee, and today's video, I'm going to talk about Austin, Texas housing update, and I'm going to do a very deep dive, and I'm going to share with you a lot of important, credible, relevant information, which may refute any kind of misleading reporting, I feel, from the national news media, as always. And the bonus you're going to get toward the back end of this video, I'm going to show you a real estate investing opportunity in the Central Texas, Austin suburban market. So stay tuned for that. Without further ado, I'm going to go over a Redfin report on the Austin housing market in the past year, the national news media, and there's a lot of negative headlines associated with the Austin housing market. So I will share with you my perspective because my investors, my real estate investors, have been investing in the Austin market for the past more than 15 years. So, and we have a good network of real estate professionals on the ground to help our out of state investors to buy cash flow properties over the years. And to this day, things have not changed because we know what areas to target, and you will get those information towards the back end of this video. But let's go over from a high level from a Redfin reporting. And today is, what's today's the 18th of May, 2023. So let's dive deep into it. Let me show you the big picture. Then I'm going to show you specific areas for real estate investors out there where you should buy within a 50-mile radius of Austin Metro. All right, I'm going to start off by the median sales price reported by Redfin. And just goes to show you that we all know Austin has home prices has skyrocketed during the pandemic. Is one of the pandemic boom towns that have experienced high rocketing appreciation, from since the pandemic began 2020 up until the first half of 2022. Then the mortgage rate increased from 3% to 7.3% in the latter part of last year, 2022. And that brought the home prices down in Austin area. So at the peak last year, before the higher interest rate, back May 22nd, 2022, the median price of a home in Austin Metro is 573,000. And then since the interest rate has skyrocketed in the second half of last year, the home prices plunge. I would not say there's a crash, and I will prove it to you momentarily. So toward the end of last year, the median price of homes in Austin Metro went down to 456,000. So we're talking almost a double-digit deceleration of home prices. But then again, given the low supply of homes and high demand, even in Austin area, things appear to have rebounded. And as you can see, the beginning of this year, 2023, the home prices was 452 throughout the first few months of February, starting around the beginning of this month, April, beginning of last month, April, housing prices started to keep up. So 450 at the beginning of this year, now is 470. So we achieved 6-7% appreciation rate so far year to date. All right. So there's a very good sign that tells people that although the past 2 years, housing prices in certain areas, many areas of Austin Metro have increased 30, 40, 50, 60% appreciation, depending on the different zip codes. But as you can see, prices have gone down, but has gone up again. So this correction, hopefully it'll correct itself based on the current trend. So there's a very good sign. All the median prices decreased in the last half of last year is steadily being made up, is steadily being offset by increases of prices based on low supply and pent up demand as we speak. So in fact, let's look at months of supply in Austin area. At the beginning, back in January, a few months ago, the supply is quite high, 28 weeks of supply. Now, the supply of homes is at 18 weeks, which is divided by 4 weeks per month. So we have a little bit more than 4 months of supply of inventory. So it's pretty balanced market. So it's still a little bit of a buyer's market right now. So that's a good sign. So we'll have buyers have more opportunities to buy homes these days. Again, The exaggerated demise of the Austin Metro has been greatly exaggerated, in my opinion, because the Central Texas and Austin Metro is still growing very fast because I call it Silicon Valley 2.0 for a reason. Yes, it's a volatile market. It's a cyclical market, Austin, but the future is very bright because you have all the high-tech companies moving to the Austin area, and the migration of people and the growth of throughout Central Texas will make this region very robust for years to come. Time will tell. Let's go over the new listings. Has been trending up, but however, it's still 13% lower than this past couple of years at over 937 new listings that came into the market. And then, so that's a little bit of a troubling trend. Pending sales that has occurred a couple of months ago, although has been slightly increasing because of right now the strong spring purchase market, like everywhere, like every year, spring, April, May should be very robust. However, still the pending sales year over year is still 9% less this year from last year, 2022, and even less back in 2021. After listing, yes, that's another important metric. After listings has been pretty flat throughout the first 3 months of the year after listings, but have been creeping up to the tune of 10,435 active listings. It's 80% higher than these past 2 years. So that's a good sign. So there are ample amount of inventory, especially new constructions, inventory that are coming into the market to offset the limited amount of resale homes available out there. So still a lot of opportunities for a lot of incentives by new builds and resellers that want to sell their homes as well. Pretty a balanced market moving forward. Acquisition is pretty stable. And finally, median days on the market have been decreasing almost 50 days to sell a house, which is pretty much at the pre-pandemic level, but it's lower, 27 days lower than the same time last year and the year before, because last year and the year before has been extremely robust market. So that's pretty much given. All right. So that's pretty much I have on the big picture of the market. And my takeaway is the crash that a lot of people have predicted on Austin market. The pandemic boom to bust perhaps has been exaggerated a little bit, given the trends and given the low supply of homes still. So right now, the Austin market is pretty balanced. So there's still a lot of opportunities. So things are changing, but there's no need to panic. And people that can qualify, they should buy primary homes, if you will. There's a lot of homes in Austin still very high price. The home price has skyrocketed, like I said, tremendously during the 2021. And there's a lot of $1 million homes, there's a lot of upper end homes out there still. So very high end Austin market. But now I'm going to switch my hat a little bit to talk about real estate investing. But as a real estate investor, you're not going to pursue to buy a rental property based on the median price of a home. Certainly, you should not buy in the inner core area of Austin Metro because it's so expensive and the numbers does not make sense for risk investors. With that said, I'm going to share my screen and go over some of the recommendation I have for mom and pop turnkey risk investors to buy this market, but you have to know where to buy. We have the resources on the ground with our network realtor investor who can help wherever you're located. Our investors located from California, that's where I live. And we have a lot of investors that have purchased in the Austin market over the years for cash flow with 25% down. We'll continue to do, but we have to move into the suburban area, better pricing, better cash flow, better rental market. So with that said, we feel right now is at the bottom of the market, right? So take advantage of bottom in my humble objective analysis. So by the bottom, there's a crisis, there's a lot of opportunity. I'm going to show you one type of category of homes that we are selling, which is off market. These kind of homes are off market. We investors within our network, which you could be part of it, can have access to this type of property. But this is the lowest I'm going to share with you due to lack of time. The lowest price rental property home that we are promoting. This is the off market, is not in a multiple listing service. The builder has decided because we have a good relationship our network realtor, Ken Leonard, have a great relationship on a local market. So the builders are opening up a small selection of homes for investors to buy for rental purposes. These are about the power of the network. So this is a low-end home. I'm going to show you homes in the low 200s, which is my way in Temple, Texas, which is 40 miles above Austin in the suburbs, very fast growing suburb in a path of growth. All right. So this is a great deal. The builders are able to lower their price a little bit and they give us additional incentives. I'm not going to talk about it because lack of time, but let me give you some high big picture on some of the properties that we are promoting our network investors, brand new homes in Temple, Texas. And the interiors are very nice. 3 bedroom, 2 bath, around 1,300 square foot. Very nice cookie cutter home. Our investors could rent it out very easily through our in-house property management and turnkey system we have in place in Central Texas. Mr. Ken Manor, we've looked at the map. This is the location of these houses. We have few select plans available for investors within our network. This is the very strategic location, and there's a lot of hospitals and universities and medical clinics all over. Temple really is known for training doctors and nurses. There are several training hospitals, very medically industry robust, and it's a very fast growing. A lot of people are being priced out of the Austin metro market. They're moving up and down away from Austin metro, and Temple, Texas happens to be an area which we feel is going to do very well for real estate investors to buy cash flow properties for 25% down. So let's proceed. As you can see, there are 5 medical establishments located within the area of the properties are located. And this is their pro forma cash flow analysis, if you will. The lowest end homes that we have available is we're selling for around $240,000. Again, it's a 3 bedroom, 2 bath. And although I know the tax rate is a little bit high, 2.39%, it's all about the big picture. It's all about the cash flow. All the numbers really make sense. You put 30% down payment at a 6.3% mortgage rate. This is all just a projection. And based on that, I go through the numbers. And at the end of the day, you still cash flow $100. This is a buy and hold long-term investment, 7, 10 years and beyond. I know the first year cash flow is not all that great, but you're not buying for short-term gains. You're buying for long-term return on investment in multiple different ways. I share that with our investors through our previous videos. You can look at our previous videos to look at different ways that people calculate the total return on investments over time. That's the beauty. That's how you benefit from buying these long-term buy and hold long-term rent leases. So very rare to have a home within 30, 40, 50 miles of Austin Metro that are selling for the low 200s. I'm surprised by it but this home we're not going to stay low much longer. If you project long-term, this Central Texas market is very robust. Population growth, job growth, the whole 9 yards, and it's going to look very good. So these numbers really make sense for many other investors. But now your first goal is to buy for long-term rent, 12 months rent or and beyond. But there are a backup plan, if you will. You could start by once you close escrow, assuming you do a long-term rent for stability and for low risk situation. But I challenge you to do some additional research. I have done it. You could potentially convert your rental property into a medium-term rental. It's an emerging middle asset class, whereby if you can find a way based on your research to increase your rent, gross rent, that house we just show you, the 240K rental home, projected long-term renter is around $1,800 or slightly more. But you could validate that if you rent your property for medium-term rental, 30-day stay to less than 365 days to whoever that can project that you can increase your monthly rent, the medium-term rental by 50 to 75% of the long-term rental rates, then that is a possibility you can convert your long-term rental into a medium-term rental not necessarily at the beginning. You purchase maybe a year down the road, 2 years down the road, you may want to explore your plan B of converting the home into a mid-term rental instead of a annual lease rental, which is that's not all that bad either. It depends whether you want to make your investment really passive and just allow the private manager to manage your rent, long-term rental, almost real easy, or you might do some more work and get some higher rent if you have the willingness and the additional effort on your part, just a little bit more effort to convert into a mid-term rental. All these good attributes associated with rental, all these people you can rent to, not only traveling nurses, not only medical professionals, but many other type of people moving forward based on the new normal that we are having. And post pandemic, a lot of people are willing to lease your home or a medium term rental more than 30 days and less than 365 days. And as you can see, this list is not all inclusive. It could be much more opportunities out there. All right. I can't go over the too much detail on a mid-term rental space, but one thing you have to do is when you do a long-term rental, the tenant will do all the furnishing. They bring their own furnishing. But you convert it to a mid-term rental. Oh, by the way, don't do a short-term rental, although you could, but I think the profit margin is not that high. Plus, there could be some local market restrictions associated with short-term rental. But I will go as far as mid-term rental as a plan B. But you need to furnish your rental for mid-term rental. This is just an estimation. If there's a 3-bedroom, could be 10 to 15 grand actual money out of your pocket to a fully furnished your rental. Of course, you also have to pay for the utility, and I prefer you to rent out the entire house, not just per bedroom. That's my recommendation. And I just took one of the information from the website furnishfinder.com, and a typical person promoting this house, they have some additional furnished accommodations right here. As you can see, I'm not going to go over all the details. You can pause this screenshot on your own when you watch my video. So yeah, those are the actual work you have to do. So the potential rent, I think you can say this property, assuming is your property that you purchased for mid 200s, right? And I found on this website a similar home, mid-term rental or renting for around 2,900 to 3,000. So you could make the argument, my math could be wrong, from a long-term rental of 1,800 to 1,900 to a mid-term rental of 2,900. We're talking like 50 to 75% increase in gross rent. So the numbers may work as long as you're willing to put in 10 to 15 grand of extra out of pocket money to furnish your rental, then calculate your ROI, how many months later for you to recoup the actual cost of furnishing. Then, of course, you calculate the increases in rent, and it will make a decision accordingly whether you can keep this as a long-term rental forever, or you could open your mind to a medium-term rental for more rental income and more cash flow. And there are two resources who can help you to market your property. You can use Airbnb, which is more costly, get into your cash flow. You can use Airbnb to promote your mid-term rental, or you can use Furnish Finder. So when you own, get into Furnish Finder and look at the website. Furnish Finder is a website that you pay $99 annual fee per property. They will help you market your property. This platform is only a marketing platform. When the prospective tenant contact you on the Furnish Finder platform, you have to deal directly with the prospective tenants. So if there's a mid-term rental, you are pretty much managing your property. You don't need to pay a property manager like you normally do in long-term rental, although you could. Mid-term rental work on any housing market, not just Texas. Work on anywhere in the country. Inside the Furnish Finder website, there's a free, it's a feature allow you to become your own landlord. You could pay a small fee and put your property information, and you could screen the tenant. You could run the credit report from this platform. You could collect the rental money from this platform. It's very robust, very high tech. You can create your lease agreement from this software platform as well. It's self-managed situation. You can do it remotely. You can live wherever you want to live in the US and use Furnish Finder and use KeyCheck to self-manage your mid-term rental space. There's a lot more resources available out there. I don't have the time to talk about additional resources you can do. There's even some other resources in YouTube channel. They have a design center where you contact them and they will help you for a fee, small fee to based on the configuration of your property. They could help you find what type of, how you could furnish your rental, how much it costs. And everything like you can delegate, you can use a lot of resources available to you because rental is fast growing. There's a lot of resources out there with the technology growth and what have you. So you have a lot of possibilities to, to make everything work, regardless of what's going on in the economy. Right now, it's a great time to buy investment property, especially here in the Central Texas. Another mini boom potentially is coming back to Central Texas, and Temple is one of the area that projected to go very fast. The rental market is very strong, the rental market. And this is a renter's nation, by the way. And Warren Buffett says, not a long time ago, the great Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. A lot of people right now are fearful. It's time for you to be greedy. It's time for you to be a capitalist, if you will, and take advantage of crisis. There's always an opportunity as a real estate investor. That's the mindset of a real estate investor. You can't bury your head in the sand. In a sub-market, in a specific locations, real estate is local. As a real estate investor, you rely on the services or the resources of a turnkey provider, such as my company. We can help you target very specific locale in a path of growth in very strategic market, not just in Central Texas, in other areas that we are also promoting. So with that said, so the takeaway is then the Austin Metro is, I would say, is recovering. The correction is pretty much over based on the trends and future projection. Austin, if you think long term, whether you're a primary homeowner or whether you're an investor, this is still Central Texas is still an extremely very robust market for achieving wealth long term. That is right. Without further ado, please quickly visit my website below and drop your email into the form to subscribe to our weekly key real estate investor newsletter. Also, comment below where are you watching this video from? Tell me your situation, or your primary buyer or your investor. You try to invest in one part of the country. Tell me your situation. I'll be more than happy to answer your comments. And also, of course, if you see value in this presentation, please smash the like button and subscribe to my YouTube channel if you have not done so already. And other than that, put your email into my inbox, my website, and we'll receive great information for out of state investment opportunities in various locations that we have for our members. And it's all free for you. Thank you so much for watching. This is Seewing Yee, and I will see you on the next video. Have a nice day. Bye-bye.